Hi, everybody. It's Jessica Stone at Stansberry Research, and I'm joined now by the research director for Stansberry, Austin Root. And Austin, you've got this thought, this important thought about the relationship between the stock market and sports. You say the market needs sports. What do you mean?
That's right. Thanks, Jessica. I think that people don't fully appreciate how important psychologically having sports is for this market. So we are in a position where, as you and I have discussed, and as we've talked about in different formats at Stansberry Research, that the market is ahead of the economy. Of course, the economy had a really bad Q2, maybe not quite as bad as initially feared, and that's really helped the stock market a little bit, but bad. And yet stocks and stock markets and many parts of the stock markets are at all-time high. That is because they're expecting that we will get back to normal eventually, that the growth, that we will recover from this Q2 lull and begin to start showing some nice growth as we can reopen everything and get back to normal, some semblance of normal. My concern is there are certain sports and certain key sports that won't happen, and that will impact investor psyche. Even if we cannot get these daily tested, almost fully bubbled sports to go back to normal, then how can we get the rest of the economy back to normal? And that could impact stocks.
What sport is really the litmus test for normalcy in terms of the markets?
The problem with thinking of baseball and basketball as the litmus test is that they are in a bubble. That's not real normal life. The one that is really, really going to impact the market, I believe, is football. And first and foremost, pro football. If pro football doesn't occur as contemplated in the beginning of September, I think that could be hugely detrimental to the market.
So it's pro football. Now, what about college football is different from, in your view? College football is sort of on the way to pro football. So where does that stack up in terms of normalcy? Because for a lot of people, either they don't have pro football or going to a college game is part of the September normalcy.
I think most folks in the market would expect that college football does not happen as contemplated. And maybe it happens in the spring. The one that is, I think, mission critical is pro football. And that is because the current expectation is that we start as expected in September. I am very concerned that happens. I think there's a psychology part of this where, as things get better or less bad, markets tend to go up. This will show a reversal where we're not getting less bad. We're actually going to be some of these openings of the economy are going the other way. It also just necessarily will force folks to lower their expectations for earnings for the market. So pro football is not a huge industry by itself. It's roughly $10 billion if you just look at the pro football teams themselves. But there is a huge cascading industry around that: advertising, concessions, real estate, et cetera. So it's a big part of the economy, but really what it signifies is that if these athletes that are getting tested every day can't get back to normal, how can the rest of the economy get back to normal?
So how do you act on that as an investor then? Not just in sort of the macro picture of where the economy is going, but where sports-related investments are going?
Yeah, so we have identified some potentially risky areas. There was a recent IPO, and it IPO'd in a tricky way. It's called a SPAC, a Specialty Purpose Acquisition Corp. That maybe we can talk more about later, but it's called DraftKings. So DraftKings is focused on sports betting. That would be
probably a lot of our audience is familiar with it in that context.
Sure. Anyway. They're familiar with the brand DraftKings. That's a public company now. If we don't have pro football and college football, that company's revenues and earnings will be severely impacted. So that's one. We have had a really nicely performing stock that we've recommended called GAN, which is the software that drives a lot of sports gambling and a lot of online gambling. That stock could be impacted, and we've recommended in different publications while we still like the long-term story, to trim that stock in the two places that we've recommended it. And then finally, there are other ones. Flutter owns a DraftKings competitor. We still like the long-term story there, but it could be impacted in the short term.
Austin, thank you so much. And we will sure hope that pro football gets going in September, not just for our own personal interest, but for the stock market and for the economic recovery as well. Our thanks to you. And if you would like to see much more content specifically from Austin Root, you can hover on the subscribe icon on your screen and you can get connected to his research. You can also follow us on YouTube or get to us on Facebook, Instagram, Twitter, and LinkedIn. Thanks so much for watching. That's all for now.